Thanks for tuning in today. Today we're here with Rico Blaser. Rico has more than 20 years of experience in the financial industry, both on the buy side and the sell side, working as a prop trader, derivatives trader at both well-known US and European banks. Rico has a passion about applying technology to financial institutions to make them more efficient, which led to him creating Vestor. Rico, thanks a lot for joining us today.
Well, it's great to be here. Thank you for the invite. I really like your podcast, so it's great to be on for once.
Thanks so much.
Amazing.
Excited to have you on.
Thank you.
Rico, let's start off with talking about Vestor. So give us the high level of what you guys do.
Our company does technology, a technology platform for what is called actively managed certificates. And that is basically an investment product, much like a fund, but it's not a fund. I can go into the differences a little bit later. And we basically, we have a platform that takes care of all the rebalancing instructions that allows you to monitor your investments in real time, where you can get a lot of reports out of, and so on. So we're basically a white label platform that we provide to issuers of these products and to allow them to serve their clients better.
Perfect. And then, so tell us what is an actively managed certificate? And as we're talking, we might call them AMCs for those that are listening. So actively managed certificates. Give it to us, Rico.
Yeah, I mean it's not magic, but it's a little bit different from a fund. So it's basically it's a debt instrument or a structured product, if you will, and it's typically issued by a bank or an SPV, and the payoff is basically linked to the performance of some kind of a dynamic underlying basket. And this basket is managed by an asset manager. So it really, it looks a lot like a fund, but it isn't, because it's a structured product that gets issued by an issuer, and then an external or internal portfolio manager decides on the allocation of that product. Now, AMCs can be on balance sheet or off balance sheet. They can also be exchange listed or OTC.
And for those that aren't familiar, so you mentioned they're basically structured products. Tell us kind of what is a structured product, and what are people putting in these AMCs?
Yeah, sure. So structured products are basically debt instruments. So they're typically fully funded instruments, and the way it works is basically the bank issues the product typically on their balance sheet, right? And then clients can buy the product, and it's like a promise of receiving a certain payoff. And historically, structured products are relatively complicated products. So you can have any kind of nonlinear payout if you want, and then the bank hedges this payout and makes sure that the investor actually receives the corresponding payout. And so in the case of AMCs, that payout is, instead of a very complicated payout, is actually very simple, because it's just the return of the portfolio that the asset manager is managing. But I spent a lot of time in different banks and on different desks, and I traded some very, very exotic stuff. So this is more typical, that the payouts are really crazy, have multiple barriers, are dependent on, volatility, surfaces, correlation structures. I don't know. One example is a power reverse dual currency swap, like very, very crazy stuff. But simpler ones, or the ones that are typically used in Switzerland, are barrier reverse convertibles at discount certificates. And so those basically pay you a coupon until one of multiple underlyings reaches a barrier, and then you get delivered, for example, the worst of these underlyings. So, but any kind of, you could have, interest rate squared, you could have, this could be dependent on the weather or whatever you want, right? It gets really crazy. And so banks traditionally have quite a good infrastructure for these products. They have hundreds of mathematicians that manage those and know how to value them and how to hedge them. But usually you have very few underlyings, and they're very well-known big names or indices, and they don't get rebalanced over the course of the investment. And this is where we come in, right? If you have products where the underlyings change over the life cycle of the product, then banks are no longer so good at managing those. And in fact, typically people manage them in spreadsheets. And I can tell you from experience, I managed a book of somewhere, it was about 7 billion in these products, managed entirely in spreadsheets in the past. And so there I really saw how much room for improvement there was. And so that was ultimately also the impetus for me to branch out and actually start a company that provides software to handle these kinds of products efficiently and professionally.
Yeah, that's really interesting, Rico. So I guess we talked about, obviously these are set up in Switzerland, you said, these AMCs?
Yeah, well, it depends on the issuer, right? So we have issuers basically all over the world. So we have some Asian issuers. We even have SPV providers in the States that create these kinds of products. There, it's less common for people to trade AMCs, and more common to do things like exchange traded notes or SPVs or total return swaps or things like that. But these are very related instruments, and so I think maybe later we can talk more about the differences between those products. But yes, this is more or less how it works. The issuers typically issue the products either from their home base. So, for example, a big French bank that is a client of ours, they issue them from France. But there are also some offshore locations where these products typically get issued. For example, Guernsey or Jersey or places like that, right? In Europe, and then in the States, you have all the islands as well, right?
Yeah. No, that's great. So it can be from many different jurisdictions.
Yeah, that's right. And some people even issue some products from one jurisdiction and another product from another jurisdiction, or even, one product on balance sheet in one jurisdiction and then another product off balance sheet from another jurisdiction.
So what are the key advantages for AMCs that investors like, that they see? What are some nuances there that are popular for folks out there?
Well, there are several advantages. I mean, it depends, advantages over what, right?
Yeah.
So in Switzerland, historically, it took a lot of time to set up a fund. And I know in other jurisdictions, that's also the case. It can take months. I don't know. You tell me. I mean, you guys are the experts in how long it takes in the States, but in Switzerland, it can take several months. And it's also a very costly process, because you need legal advice, you need a custodian, you need prime brokers, you need all this setup, right? That costs you a lot of money, not only for the initial setup, but also on an ongoing basis. And so that's one thing that you can significantly speed up with AMCs, because they're like structured products. You can basically issue them intraday. So, and what or exchange list them the very next day. So you save a lot of time to go to market. And so if you have some kind of a tactical idea, let's say right now, Trump just got elected, and you have an idea of how to play this in the next 30 to 90 days, and you want to create a vehicle to allow other people to benefit from that expertise. If you create a fund, that fund will not be ready until 6 months into his presidency. Whereas for an AMC, you can start tomorrow, right? So that's really a big time to market difference. The other difference is of course that because the bank essentially lends the infrastructure to the portfolio manager or asset manager. You also don't have to have, direct market connections and all the live market data and all this kind of stuff that you normally would need to have, because the bank can provide it for you, and you can as a portfolio manager, you can leverage that infrastructure.
Yeah. Okay. So it sounds like less cost, speed to market's faster comparatively to a fund or exchange traded product. It sounds like. As far as the, do you get a term sheet? What's the filing process look like? Can you explain a little bit more about kind of how these are set up?
Yeah, sure. So normally there's some kind of a subscription period, and basically the issuer creates a term sheet. There's on the term sheet, it's mentioned, who the issuer is, what the credit rating of the issuer is, who the manager is, the portfolio manager, what kind of the investment strategy is, if there are any constraints on the products, and so on. This is all listed transparently on the term sheet. And then there's usually a subscription phase, so people can get in and subscribe before the product even has the initial fixing. But then, and this is quite nice, once the product is live, it's actually even if it's not exchange listed, oftentimes you have a secondary market, or most of the time you have a secondary market. So basically, either the issuer or a third-party market maker makes a market in that security, and you can trade intraday. So it's almost like the difference between a fund and an ETF, right? Where in one case you only have the subscription cycles, and in the other case you can trade intraday, and so that makes AMCs actually very transparent as well.
In terms of cost, because you mentioned you can get these set up pretty quickly, how does it look like from the cost perspective?
So this is very dependent on the issuer, right? So my company basically provides the technology that allows issuers to offer this service to external or internal portfolio managers. And so we don't set the cost, right? We charge the issuer a fee, but ultimately it's the issuer that puts this product on their balance sheet, that performs the rebalancing instructions and so on. And so they can decide how they want to do this in terms of pricing. And obviously it kind of depends what you put into that product. Like if you put cryptos into that product, the pricing will be a bit different from if you put only very liquid futures, for example. But just to give you sort of a range, I would say the cheapest you can get if you have just very liquid assets in very liquid markets, then you can get down to probably, like, I would say maybe 20 basis points or less in terms of a management fee. Again, it kind of also depends on your rebalancing frequency and so on. And in some cases, issuers charge for the rebalancing, and in other cases they don't. Like they have like higher management fees, but they charge for the rebalancing and so on. And then it goes up from there. And if it's a very complicated product, I don't know. We have people who have student loans on there, for example. We have people who have, we even have, I think one party even has racing horses on there, like, crazy stuff you can put in there, right? And so there, the management fees can easily reach 100 basis points, right? And then, of course, from this management fee, different people get paid, right? The asset manager gets paid for their expertise and for the rebalancing and the management. The issuer gets paid for making the balance sheet available, maybe for providing leverage, and for other services they provide, maybe research, and also ultimately we get paid out of that somehow, right? Not directly, but indirectly through the issuer.
Okay. As far as the, so they're going to issuer wants to set up one of these, is going to also like a lawyer or a law firm to get it set up?
You don't need to. This is kind of the cool thing. You can actually just reach out directly to a bank, and just look for banks that issue structured products. And most of them should be able to do this. If they're not able to do it, refer them to us, and we provide them with the technology to make it happen. But it should be possible, right? And in the worst case, they do it on a spreadsheet, and then they can do all of this setup for you, right? And ultimately, even though you are the portfolio manager or the asset manager, and even though you have maybe already investors behind you that want to invest in your product, the product is ultimately the bank's product that they issue, right? And then you basically funnel these investments to the bank. But of course, they're your assets because you get paid out of them. But you just don't have to deal with all the hassle, including the legal hassle, which is quite nice.
Yeah, that's interesting. So it would make sense. It'd be really easy if, let's say, somebody wanted to set up a AMC where I'm investing in maybe European stocks. Maybe we want to take like a broader index, and it sounds like that would be pretty easy where the bank's setting these up, and it's more of like a derivative. Is that correct? Where want to buy these assets?
Yeah, it's super easy to set up, and you're exactly right. It's more like a derivative in terms of you don't own the underlying asset. You own basically the note from the bank, right? And then the bank may or may not actually do the hedge, and if they don't, then they might run into troubles. But I would say when I used to be a trader in these instruments, which is already a few years ago now, we used to actually take this kind of basis risk. If someone said, I want to put Pepsi into my basket, I would maybe hedge with Coke, but nowadays people, especially after the financial crisis, have gotten a lot more risk averse, and they basically trade these things through. And so you basically, what the portfolio manager wants, the bank will actually buy as a hedge, and they really just earn the fee, right? They don't take prop positions anymore, or at least not to the extent that they used to.
Yeah, and then on the liquid asset side, like you mentioned, you gave a kind of interesting example, like racehorses. Kind of how does that aspect work?
Yeah, I mean, this is one of the cool things about AMCs, is that you can literally put into them whatever you want. And so actually one of the very popular first products that came, crypto products that came out, were AMCs. So before, you may remember the Winklevoss twins, when they initially wanted to set up a fund. It took them, I think, 3 years or so, right? And during that time, and I think in the end they weren't even the first ones anymore, but during that time, there were banks in Switzerland that already had fund-like products. I mean, I hesitate to say fund-like because there's a clear distinction between them, and the regulator is very clear about that difference, right? So I'm only saying it conceptually, not in terms of use it for the same purpose, but just in terms of conceptually a fund-like product. That already offered, for example, a crypto investment, and one of the most successful AMCs, I think that was in, I would say, already 2016 or 17 or so, was a Bitcoin AMC, and that was very successful. And there, obviously, the fees were much higher than what I quoted just a few minutes ago. But it was a very, very successful product, both for the investors as well as for the issuers of the product.
It makes sense. So I guess someone can go to a bank to get one of these set up, these AMCs, and then they would come to you, Rico, as far as from an ongoing platform perspective?
No, it turns out, so we're actually completely B2B, white labeled. So actually, in most cases, you wouldn't even know that we exist, right? You would directly go to a bank or to a SPV provider, who would set this up for you, and then they would provide you with a platform to manage those products. So, for example, to to see what you currently have in your product, to see what corporate actions got applied, to pull out a report. Right now is the beginning of the year, right? So you want to send an investor update with all the numbers from last year, and you want to do all of this online, right? And so you go to your issuer or your provider, and you do this without realizing that it's actually not the bank that developed this software, but it was Vestor that developed it and worked jointly with the bank to provide this to the asset manager.
Got it. So you're in the back office for the bank.
Yeah, I mean, I wouldn't say, I think actually back office is probably the wrong description, because there's a lot of manual stuff happening in back offices, and a lot of things we don't do, but certainly the technology platform is what we provide. Yes.
Okay. So what is your technology? What does Vestor do then for these products?
Yeah. So we have a software platform that is a white label platform that banks can use and then make available to their existing or future asset management clients, which are also professional investors. And by using our platform, these investors can communicate, for example, rebalancing instructions to the bank in a standardized way. They can see what's happening in their portfolio. They can communicate with the bank. For example, if they want to issue a new product, they can do that on the platform. They can configure constraints, and those constraints are then monitored. So, for example, if you want, you made the example, Mike, about the European equity product, for example, that you could just set up like this and put the corresponding constraints. And then if an asset manager on purpose or by mistake, adds a bond to that basket, then it will be flagged up, right, automatically. Or if you add a US security, then it will be automatically flagged up. And so that provides a lot of convenience to all parties involved.
Yeah. What's the type of investor profile? What types of investors are coming into these products, these AMCs?
Yeah. So, I mean, we're talking a lot about AMCs, but actually this is kind of how we started out, because we saw that this was a very big market. It's actually by now like a $2 trillion market, which is we saw it's a very sizable market, and one that not too many people knew about or still know about. And so that's why we thought this was a really great opportunity to get into that market, because we knew the market well, and we also had the quantitative background to understand how to automate many of these processes. But actually, similar workflows and similar needs occur in sort of related markets. Anytime you have an investment product that has a dynamic underlying, I mentioned some examples before, for example, total return swaps. You have the same kinds of needs. You need to communicate with the other party. You need to create reports. You need to, do rebalancings and so on and so forth. And so we realized that our software is actually applicable to these markets as well. And so, for example, with TRSs, we're working with some very large banks to apply our technology to that as well. Or SPV providers have been customers of ours for a few years already. And just now we're starting to investigate things like SMAs, right, which is a very big market in the US and less so in Europe. But and actually one of the more exciting markets for the same type of technology are crypto markets, because in crypto markets there's still a lot to be done in terms of professionalizing the infrastructure to manage those products. And so we're working on quite an exciting project there. So I wouldn't. So when you ask, about who's the typical investor, it's by now it's already quite broad. But yeah, I mean, it's typically like the people who are actually using our software, right, are typically institutional portfolio managers of one of these types of products. And then the end investors are typically either high net worth individuals, or even in Switzerland, we don't have these kinds of restrictions that you have for structured products in the States. So it's really anyone can invest in these products. But then some of the bigger products, you also have to realize, that there are some very small products that only have a few million in them, and then there are some very large products that literally have billions in one AMC, right? And so obviously the type of clientele that invests in each of those is very different. You have some institutional investors and you have some retail investors in the end.
Okay, so there's no restriction. It can be retail, it can be institutional.
Yeah, and typically,
No.
actually, this is one thing we do on our platform, right? You can you can create an index, for example, manage that index, and then have multiple AMCs or multiple products based off of that index, and then you typically have like a retail tranche where the face value of this thing is maybe $100 or so, and then but the fees are a bit higher. And then you have a second tranche, maybe even in a different currency, that is maybe $100,000 a pop, and then of course in these institutional tranches, the fees are also lower. So all of this kind of stuff is all manageable on the platform.
How about from a service provider perspective? So obviously they're either going through a bank, as you mentioned, like for an example. You also mentioned like the bank will kind of provide like the setup and whatnot, which kind of think of like the legal aspects. Do you need a fund administrator? Do you need auditors? Things like this for your AMC?
Well, it kind of depends how you're set up and in what jurisdiction you are, but I mean, I don't want to give general legal advice, especially not in the US where everything might be different. But in general, I mean, obviously, a lot of the stuff is provided by the issuer through our platform. So, for example, you can even get, for example, some data that is necessary for your taxes and things like that. You don't need a fund administrator. That's kind of a big benefit here. But the other things, I mean, if you need legal representation or whatever, and an accountant, you need definitely, right, some kind of a fund accountant to make sure that you're complying with all the reporting requirements. But it's really a much lighter touch than in the fund world, and we see this as well because we were considering, for example, offering our platform for the fund space as well, right? But the requirements, they do differ in some areas, and there are some things that we haven't focused on that would be necessary for that space.
Yeah. So regarding you mentioned reporting or accounting work, how often is that done for these AMCs? Is that like a fund, like a quarterly or a monthly schedule? What does that look like?
No, it's actually done on pretty much a continuous basis. So we calculate. We're not a calculation agent in the official sense, but the platform makes it possible to create NAVs on a daily basis. Some people even compute intraday NAVs. So that's all possible. And then the reports that I was talking about are more graphical in nature, that you have, all kinds of drawdown graphs, and you have, top performers, bottom performance, sector allocations, this kind of stuff. And you could pull it out every day if you wanted to. And actually, some people have subscribed to the reports on a daily basis, but most people really just run them once a month and then make those available to their investors. And also, like people do the monthly investor letters, you can provide all of that data and all of these inputs as well, and you can really customize these reports. And that's actually another very cool feature. When I was a trader, people would come to me and say, "Hey, I need to provide my investors with a month-end report," and then we kind of had to pull this together from different sources, some stuff from Bloomberg, some stuff from our systems, and then offer them whatever we had, right? And now it's much cooler because the individual asset managers can actually go on the platform and customize this to their needs. Even like, for example, color schemes that match their corporate identity and stuff like that, and then create a very visually appealing report for their clients. But as you implied, right, there are different kinds of reports for different kinds of purposes. One is for taxes, one is for your investors, one is for your own purposes. So, and the frequency then depends on what the purpose is.
Makes sense. So it's more like an investor portal process, like investors can log in, they can get a report.
At the moment, we don't actually allow end investors to log in, but it's the asset managers that can create the reports that they can then go on and send to their investors.
Okay, so these asset managers are then providing to their end investor.
Right. So there are really three layers here, right? There's the issuer, which is typically, let's say, a big bank. And then there's the asset manager, which is maybe a smaller private bank or independent asset manager. And then the third tier sort of is the end investor that wants to invest with this independent asset manager.
Got it.
And we primarily serve the first two to make it possible for them to provide as good of a service to the end investor as possible.
Got it. I think we covered a lot here. Why don't you, to kind of bring it all together, tell us the difference between an actively managed certificate and an ETF. What are some of the major advantages or drawbacks to using, an AMC versus an ETF?
I mentioned some of them already, right? That starting the ETF takes a little bit longer. In the case of the ETF, it's always by definition, it's in the name exchange listed, right? With AMCs, you have options. One difference is that you have, in the case of an ETF, you have kind of a segregated entity where the money actually goes and the assets actually go. Whereas in the AMC, you have an issuer that takes this on their balance sheet. Now, actually, this point may be a disadvantage on the surface because it means that you're facing counterparty credit risk, right? Because this is kind of the Lehman effect. I know this very well because I was at Morgan Stanley just across the street when the Lehman debacle happened and watched people, carry out boxes, which was very unpleasant. But there's a good risk mitigation method for AMCs. In Switzerland, for example, there are two mechanisms. One is called TCM, one is called COSI. And TCM is tri-party collateral management, and that's more for like off-balance sheet products. And then COSI is for exchange-listed products, and that's more standardized. And so this works like a margining or collateralization facility. And it ensures that even if the issuer goes bankrupt or, that you still get your funds because the funds are not segregated, right? Normally, in a regular, if the bank has a segregated entity, then you always, even if the issuer, even if the provider of or the instigator of the ETF goes bankrupt, you still have those assets that you can distribute amongst the investors. And that's not the case for structured products or AMCs. And so with these mitigation measures, you can essentially reach the same level of certainty. And if I'm already speaking about that, I can maybe explain that there are some other mitigation measures that you have as well, because you have multiple issuers, right? And so you can diversify across issuers, even if you don't use these kinds of collateralization schemes. Yeah, I mean, in terms of secondary markets, it's relatively similar. In terms of pricing, it depends on the product. It's relatively similar for similar products. And then in terms of diversity, you can put a lot more stuff into an AMC than you can put in a ETF.
Interesting. Yeah. So I guess from the end investor's perspective, I know you guys work with issuers, the banks, but from an investor perspective, when they want to exit their investment, they want to liquidate. What does that look like? What role does the issuer play in facilitating that market making? What does that process look like?
Yeah, like with an ETF, there's a secondary market, and so typically, especially for smaller AMCs, you just have the issuer actually make the market, and if it's exchange traded, you can literally go on the exchange and just dump your position. If it's there are also different styles of these investments. One we call fund style, and one we call certificate style. And then depending on which style it is, you would handle it slightly differently. So you could have, for example, if you have an off exchange product, an OTC product, it would be possible for the issuer to, like, if you have, more illiquid underlyings, like, for example, you have hedge funds in there or whatnot, or real estate or whatever, then you can actually handle it more like a subscription redemption and actually, reduce the frequency so you have enough time to actually get out. Because, if, for example, if the underlyings are hedge funds and they only provide NAVs once a month, then the AMC that contains those hedge funds cannot offer more frequent liquidity than the liquidity in the underlyings. So it varies quite a bit. But normally, I mean, most of the stuff is, typical stuff that people do with this is they do very liquid stuff. They do, for example, thematic baskets. That's like a very common thing that people do. People kind of moved away from the traditional core satellite portfolios and now do these big ideas, big thematic baskets. And that for that, AMCs are perfect. And this has kind of shifted as well, right? I mean, even actually you see this in ETFs as well, right? You used to have, when it all started in the 90s with these, you had spiders and you had whatever, you had just a few ETFs, and they were all like big index ETFs. But now you have basically for every sector, you have XLE, you have XLF, you have you have a separate ETF, and you see the same kind of thing for AMCs. And even more so, you see, for example, people, for example, have a battery focus, or like, lithium battery focus, and then they have some physical lithium and some battery factories, for example, or you have
might be like AI or something.
Yeah, AI is a very good example that has been popular recently. And then you can decide where you want to be. Do you want to be in the supply chain with NVIDIA and all these guys, or do you want to be even in private equity kind of deals with OpenAI, or do you just want to do the FANGs of the world? There's really a lot you can do with AMCs. And this has also changed kind of the sizing of these products, because when everybody used to have just the index, you had one big AMC or one big ETF, and now you have thousands. Actually, I believe there are more funds now in the US than there are underlyings. So, and they're just linear combinations of the underlyings, right? So, and I think the same thing you see in AMCs. Yeah, it's you see then that a typical AMC maybe 10 years ago used to be maybe 20 million, and now a typical AMC is maybe 5 million. But you have many more. You have 10 times more of them. So overall, the assets in the space have increased, but you have more products to manage. And obviously, this is where our platform comes in, right? Because as a bank, if you manage the same assets, but you have 10 times more work because you have 10 products to rebalance, then it's no longer economical to just, hire more juniors on the desk to do this for you. And then it's really the clear case for automation, and that's what we provide.
Okay, so it can be highly liquid strategies or products. I think like you said, exchange traded, which is a good example. Exchange traded funds, even like GLD, for example, isn't actually ETN. It's a note amount of fund an exchange traded fund. You don't realize that, but that's an ATN out there, highly liquid, versus, as you mentioned, private equity, quarterly rebalancing. So to your point, if you have a AMC of underlying private equity funds or investments that only have a quarterly reporting schedule, you can only do quarterly because that's the underlying is the max of core.
And actually, I mean, ETNs, basically AMCs are basically ETNs with dynamic underlyings, right? That's like, I think that's a good way to get it across to your viewers, because they probably haven't heard of AMCs and they think, is this a very Swiss thing? But it's actually, if you think of ETNs, then you're already really on the right track. This is what it is, basically.
Great point.
And then if you go a bit further, you can say that static ETNs, or for example, GLD that you mentioned, are basically dynamic AMCs that never get rebalanced, right? And then you can basically say, if this is the case, if then an ETN is actually equal to an AMC, right? It's actually the same thing.
Interesting. Okay. Very cool.
How have actively managed certificates evolved over time, and where do you see them going in the future?
I think, I mean, one aspect I already mentioned, and that's the sizing, that sizes are going down. Another aspect is, the diversity of the underlyings. But one thing that we've seen very strongly is also the rebalancing frequency. So people used to rebalance these things like, once a month or once a quarter, and that's it. And now we have some AMCs that actually get rebalanced intraday, so multiple times in a single day. And this again, right? I mean, it's a chicken or egg kind of issue. Like, is this the case because they now have a platform that allows them to do this, or did they want to do this anyway? And then the banks had to get a platform to to actually allow this. But these are some of the bigger trends. Another one is what I mentioned earlier, that people are doing more kind of things that are off balance sheet, and this also has to do with some of the changes, especially on collateral during the financial crisis, right? That some of the assets that you hold on the balance sheet need quite a bit of collateralization, and so people are keen to get them off balance sheet.
That makes sense. Very interesting. Any specific? We talked about a lot of different jurisdictions too, Switzerland, the other places globally. Is there any trends around like setting these up in specific jurisdictions, or is it truly just based on the asset that they're going after?
Yeah, I would say it's more dependent on the issuer. But what we do see is, I would say more for SPV providers, they're more optimizing this aspect. And so, but there you have the typical kind of jurisdictions in Europe, from these islands that I mentioned to Luxembourg, for example, some issue from various jurisdictions, and it just depends on the setup of the particular bank. We also, I think, what we noticed is, like, in Asia, actually, maybe so in Asia there are a lot of things happening, particularly in Singapore. Hong Kong is also interesting, but I think people have kind of more focused on Singapore recently, since China has taken over Hong Kong, right? Then we see some trends in Latin America where people are issuing more of these products. There's a lot of action happening in the States there, especially in Florida. Some people call Florida the financial capital of Latin America, and we see that as well. That's really seems to be the case. Then there's also a trend we see, people are starting to issue these kinds of products in South Africa, and they're also exchange listed in some cases as well. So the exchanges have changed the rules there as well to allow for this. So there's a lot happening, and it's quite a dynamic space. But we try to remain in the traditional Swiss sense, to remain neutral to these changes, and to just provide the platform, and we don't need to be, we're not regulated by a financial regulator either in Switzerland or abroad, because we just provide technology to people who are regulated, right? It's like if Microsoft sells their Excel sheet to a financial company, they're not regulated by the SEC, right? It's actually the bank that buys the spreadsheet that is regulated.
Makes sense. Yeah, and then speaking of that, so obviously the asset manager working with the issuer, the bank, these are filed. Is there a specific regulation that these are filed underneath at all?
Well, this depends a lot, and I'm actually I wouldn't want to go out on a limb here, because it depends a lot. I mean, there are quite a few regulations in different jurisdictions that apply, and it also depends, if you're a bank or if you're an SPV, and then you fall under different regulations. So it's I cannot make a blanket statement.
I just have one quick question. I mean, from an issuer perspective, Rico, how do issuers differentiate themselves in setting these products up or working with these products, right? Is there, obviously fees can be a factor from an investor standpoint, but curious, and obviously the type of investment too can be totally different too. But
right, I think that's it really, right? I think some people ask, why do issuers, multiple issuers, and in some cases competing issuers, use your platform? Because then the offering looks very similar in both cases, right? And how do they then differentiate themselves? So which is a very similar question. And I think my take on this is that issuers differentiate themselves through in many ways, right? Like for example, which markets they're good at. Like for example, if I want to buy Latin American bonds, I don't go to the local Swiss issuer, right? I might go to a US issuer, or I go directly to a Latin American issuer, or I go to Banco Santander or whatever, a Spanish issuer, for example, people who have ties there. If I want to buy Swiss small caps, then I go to a Swiss issuer, right? So I think that's already a big difference. And the other thing is that credit ratings matter a lot. Because as I mentioned, you're exposed to counterparty credit risk. And so if you have a different credit rating, if you have a better credit rating, that makes you a more attractive issuer for these products. Oftentimes the research is a differentiator that you offer. And then obviously one thing, I mean, now if everyone has the same platform, then that's less the case. But today that's not yet the case. Some people have platforms, some people have their own platform, some people don't have a platform at all. And so that makes a big difference in terms of how easy to use, how quickly you can access your products, how easily you can interact with the bank. It also makes a difference in terms of operational issues and errors, right? I saw this all the time. I mean, there are, for example, we had people, send us spreadsheets that said, I want to add international business machines to my portfolio, right? And then it's like, as a trader, you're like, okay, that's IBM. What's the ticker? What's the ISIN? What is this restricted or not? Like there's a lot of stuff that can go wrong from this email that you receive to the actual execution and the rebalancing of the portfolio. And so I would say companies that have a solid platform in place, they not only offer a better service, they also reduce the operational challenges.
That's a good point. I even think about just kind of a more recent example, like thinking about like different like Bitcoin ETFs, where it's a lot of them are the same products. Some of it's marketing, different issuers, things like that, like you said. So it's cool to think about. Just how do you differentiate the same products?
Right.
In some cases.
Right.
Cool. Anything we haven't covered yet, Rico? Anything that you want people to know about Vestor or about AMCs in particular?
I think we covered a lot of ground here, and I think to people who are not familiar with AMCs, it's a lot of information already.
Awesome. Well, Rico, this has been a lot of fun. Really appreciate you taking the time. Where could people go to connect with you and learn more about Vestor?
Yeah, you can get on our website. It's vestr.com. So that's VESTR.com. You can also link up with me on LinkedIn, and be very happy to talk to you. On our website, you find a lot of white papers and a lot of detailed information that is quite valuable. Some of the content we've developed with some law firms in different jurisdictions. I think there's one with a U.S. law firm actually. There's one with that looks at the regulations in Europe and Germany and so on. So we're expanding that series. And there you will find a lot more details on these points that I kind of skipped over now. You ask me sometimes explicitly, but I didn't want to go out on a limb. And I think not every market is interesting to every viewer. So please check that out, and then you get the document that is right for you.
That's great. Well, we'll make sure to include all that information and resources in the show notes. Rico, this has been a fun conversation.
Yeah, thank you guys. Thank you, Mike and Skylar. It's been great. Yeah. And as I said at the beginning, I really enjoy your podcast. It's an honor to actually be on one.
Yeah, we appreciate it. Yeah.
Thanks so much, Rico. Appreciate the insights on AMCs.